Hello and welcome. It is Friday, the 31st day of March 2017. And welcome. My name is Derek. Let's take a look at PIVX and try to determine an upside target. For looking at this daily chart, this is a spectacular looking chart as I see it. Why? Because during this huge rally, you finally had this come up with high volume we can see in here, and has spent over a week correcting sideways. It was making a symmetrical triangle shape in this little pattern and has now broken the last couple days to the upside. Further, for why it's such a beautiful chart is because whenever you have these big moves and it tops on high volume, well then what, in the sense it's got to correct either through price or through time. This is through time. But where are the sellers? Where are they? Well, some of the people already sold, and maybe there's a bunch of people that want to sell that have just not been paying attention for the last 8 or so 9 days and are just late to the party. No, that's not the case. What this means is that those who have a lot of shares don't want to sell yet. That means that this is extremely likely to move to the upside. Now, I'm not trying to be a salesman by any means, because quite frankly, I have nothing to gain for your decisions within such, unless of course you're looking to spend millions and millions on a long position. Even then, it's only going to affect the market a little bit. But no, this just has a very, very beautiful setup as it's set up. But now the question lies is, where can I guesstimate that it's going to find resistance breaking past this key previous high of a week and a couple days ago? Well, let's do some calculations. Now, the general rule that I use is high divided by low, so the difference of the move, to the power of Fibonacci, exponential that is, and then multiply that by the low. So for Fibonacci upside, or using this example with the 4,000 low and the 9,700 high, this divided by this to the power of 1.618, multiply 4,000 again, just happens to work out to 16.7, which is about double from where price action stands right now. However, I've been using a lot of this Fibonacci calculations all day within this chart, or all for the last couple of days, and a lot of the historic ones have not been that great. So what I did today is revert to historical Fibonacci upside methods, and that is, instead of using the calculation with the exponent, this time I'm going to take the difference between the high and low, so subtract them, then multiply the Fibonacci point and add the low. This measure has been working out spectacularly well for silver, and I'll do a video on that probably for Sunday. But for now, I'm going to try it within this. And you need to find a very old school key range. So let's do that. And there we have it. We have the twice hit high, and at about 26 and a quarter or so. And this twice hit low, and at about 365 or so. So I've put the information in this spreadsheet. A low of 365 and a high of 25. Let's look at every single one of these numbers. The first one, 1.618, or the 161.8%. And the 261.8% brings in levels at roughly 3850 and 6,000. How did these numbers play out? Well, 3850, let's find it roughly around here. So it was resisted, not for long or not for much. And then the next move up, it takes it out. 4,600 was the next one. I think it was. No, 6,000. Yep, 6,000 was the next one. And 6,000 was nothing. It was not resistance. When a key area of resistance or support doesn't do it and the momentum keeps continuing further, fast move to the next level. So breaking this 6,000-ish barrier, 9,500 and 15,000. Well, 9,500 is roughly here. It was support, but that was the second time in a row it wasn't resistance. And I guess another fast move to the next level, which works in 15,000 right at this top. So this level of resistance was such, back down to the next key level. And then breaking this, well, what's above 15,000? The answer is we got 24 and 39. 24. Not resistance. Nope, not resistance. 39. Roughly around here. It was maybe intraday or a few hour resistance, but it was mainly support though. But it's working out as Fibonacci does to how it's supposed to play. 63 and 100 is next. 63 is right here. Right at this flat line point. Okay, I find that interesting. And the 100, well, this number got up to 9,700, so that was a pierce below. So that's pretty much a work. Next number is 164 and 266. This one is 167. And there's been a few pierce belows in these ones as well, like last one at 100. So I'm going to think 160, 161, 162. Even a little more safer, 150 to 155. As an area you want to liquidate some of your tokens or your shares, however you want to name them. But remember, it's almost like 50-50 that the areas are going to be resistance, and 50-50 she's going to keep going further as it plays. You're looking at a code with a price action in at 83 with a very strong bullish setup. That looks like a easy just to be a safe pick. It's going to double. If I want to go more aggressive, triple, quad, sank, all that stuff, but it's going to at least double. And that's the sickness that these cryptocurrencies offer as far as what the volatility that they present themselves. And of course, this one not only is no exception, but might be amongst the elites for very high volatility. Thank you for tuning in, and have yourself a magnificent weekend.